In today's session of Visual JForex, I will be demonstrating to you the use of indicator block named Normalized Average True Range. This is one variant of the average true range. We had seen how to use the ATR in a prior session. Now today we will see this modification and how we can design and develop the algorithms using this NATR on the Visual JForex platform. This indicator you will find listed amongst the trend following indicator. So here it is. After the Fibonacci pivot point comes the normalized average true range. Here we don't really have the description, so we will be straight away heading to the Visual JForex board developed by the Dukascopy Bank SA. And to find this indicator, you have to go to the trends classification, and the second indicator block is NATR. As far as its calculation is concerned, you first need to know the ATR's formula, and for us, fortunately, the job will be done by the system, so we don't really need to worry about the calculation. But still, to give you an idea, the ATR first needs to be calculated, and ATR is simply the greatest of the difference between the highest and the lowest of the current candle, or the absolute value of the difference of the prior close and the current low, or the absolute value of the difference between the prior close and the current high. So whichever value is the greatest of these three values is taken as the ATR, and then we normalize that ATR value for the given period of time, and that's done simply by dividing the ATR value by the closing value of the underlying instrument and then multiplying it by the 100, and that way we find the NATR, and NATR then can be utilized to design and develop the algorithm. We have to see these parameters, what kind of customization will be able to bring in the profitable trade for us. So we have to customize these 4 input parameters, depending on which we will get this output value. Now let us see how the indicator works on the NATR. So keeping that in mind, we will be in better position to design and develop the underlying logic for our algorithm. So here you have to do the quick search NATR, normalized average true range. Here it is. ATR gives you the sense of the volatility in the underlying instrument. So now this is being plotted on the hourly time frame for the Euro USD for last 14 hours. As the time period is 14, that means last 14 hours data is being taken into account, and it will give you the idea of how volatile the situation is. If there is not much volatility, then comparatively speaking, you can see that the NATR value goes down, and whenever the volatility is a lot higher, the sharp uptick can be seen in this NATR graph. So you have to kind of get the idea of user volatility, and that you can do simply by observation. So what is the normal NATR value, and then what can be the extreme values can be inferred depending on the historical data. Of course, we have to be mindful that no historical data is going to give you the exact idea for the future, but you can get the sense, and depending on the time frame we choose, we get the NATR value. Suppose if you want to delete NATR value, then you have to take the time frame for the day, and then you can design and develop the algorithm based on the NATR value for the day. And if you want to use it on the lower time frame, you can do so. So all you have to do is take the lower time frame data. And one of my favorite use of the ATR or NATR is many times the finding of the level for the entry and exit points, and of course the underlying volatility, as I said, also gives you idea of what kind of stop loss targets should be used, and how likely is the movement in the desired direction. So that way we stand to gain a lot by relying on these NATR values. So the first thing is choosing the instrument of your choice and then count the time frame. And as I said, the calculation will be done by the system, so we don't need to be overtly bothered with that. Now let us head back to the JForex Visual JForex board. So here we are. We are using the on candle as our start point for the today's session. As I have said many times in the prior session, any of the three can be used as our start point. So the on tick or the trade event. Now for today's session, we are relying on the on candle to initialize the setup. This must, you have to choose the start point. Then coming to the default instrument, if you want to change this instrument, you can do so, provided it is supported on the platform. So these are all the instruments listed here. Any of the instrument amongst it can be chosen for designing the algorithm. Then comes the question of the period of the candlestick. Now, as I said, the hourly data or 10 minutes data or the daily time frame data, you have to see what is the time frame you are seeking. And as I said, we will get the volatility measure for the underlying period. Suppose if you want to see what kind of volatility is there on day time frame, then you simply take the period for the candle to be of day, and if you want to work with the lower time frame, then all you have to do is take the appropriate time frame and you will get the ATR range for that given period of time. We will keep day. Day is most preferred by most of the traders, so even my choice generally is to work with the NATR on the daily time frame. Coming to the shift, if you want to take into account the current NATR, then the shift needs to be kept at 0. If you want to go back in time, then the shift should be changed appropriately. Suppose, for example, if you want to retrieve the data for 3 days back, then you have to shift this 0 to 3. All you have to do is change it, and you will be in a position to retrieve the data for that particular period of time. Time period, how many candlesticks you want to take into account while calculating the NATR. The larger the time frame, more smoother will be the NATR output value being plotted, and as you will have more days being used, the smoothing will be there, but the lag will also be there. Suppose if compared to the prior period, if the volatility has suddenly increased, but it is going to be averaged over a longer period of time, so you won't really get the immediate impact on the NATR, and gradually only it will be visible. So there are two ways to look at it, whether you want to see the volatility in a shorter time frame, then in that case you will be in better position to see the changes compared to the latest time periods. And if you want to use the longer time period, then it will average out over that given period of time, and the moves won't be that swift in the NATR output value compared to period over period. So that's how this works. And depending on our these four input parameters, we get these output value, the NATR output, which has been plotted on the chart also. And also we have to be careful of which values we are using in this setting. There will be always a slight difference depending on the bid or on the ask side, as the spread is there. And also the volatility measure is going to be dependent on the price you are using as the input. So depending on the price you use, whether it is closing price, open price, high price, low price, medium price, or all any of the supported price metric, you will see slight difference happening in the output value for the NATR. So whenever you are working with the NATR, and if you want to compare two NATR values over a different period of time with similar custom parameters but only shift value being different, then you also have to make sure that they are plotted using the similar settings on the similar applied price and the offer side, so as to make these different values comparable. Otherwise, it will be like comparing apples to oranges, so you have to be careful on that front also. So that's it from my side for today's session, and I hope you have been able to understand the use of this indicator. As I tried to explain to you, it is fairly simple to use, and also its calculation is also simple, but it has immense value when it comes to determining whether it is the right time to get involved in any particular trade or not. And our job is to see how much movement is happening in our instrument of choice, and depending on the movement only we get the profit. So this indicator gives you the idea of the movement, and then accordingly you can plan your trades. So thank you all for joining in. If any of you have any query or any idea to share, you can give me the feedback in the comment section. And of course, stay tuned and subscribe to the channel to keep up with the developments in the market. Goodbye.